Today, let me show you top 5 dividend payout blue chip companies listed in SGX of Singapore Stock Exchange market. This clip will show you top 5 to top 1 company in the order of dividend yield. Number 5 is UOB. UOB is a Bank of Singapore, and this is one of 3 major banking companies of Singapore along with DBS and OCBC. As expected, the main business they provide is financial services such as banking, insurance, asset management, and so on. Now, let's take a look at their stock price chart over 15 years. I can say that the stock chart has been onwards and upwards. Current price dropped a lot recently, mainly due to the overall market situation caused by coronavirus pandemic though. This is an income statement with 4 years of history. Net profit margin ratio is 41.8% recently, which is quite outstanding. In general in history, net profit used to be over 30%, which is sufficiently profitable, I believe. Balance sheet shows quite high liability against total assets, but this is common and reasonable for the banking sector. Although I haven't looked at their balance sheet in detail, I believe UOB shall comply with regulations mandated by the government to make sure they run business with stability. Dividend yield TTM is 6.39%. TTM means the average yield over a past year. Number 4 is Singtel. Singtel is a leading telecom company of Singapore and one of 3 major telecom companies of Singapore along with StarHub and M1. As a telecom company, of course their main business is mobile service and internet services by broadband system. Their stock price in history is pretty fluctuable and not so pretty. Their price has dropped a lot for the past 5 years, which is really a major concern about this company from an investor perspective. In terms of income statement, their revenue was quite constant, however, profit dropped a lot as you can see. As a telecom company, net profit of 8.38% is relatively low against a market standard of the telecom sector. This decreased profit explains the drop in a stock price. I don't know the exact root cause for profit drop, but I guess this is due to the tough competition environment in Singapore with new players in the mobile market. Not many outstanding topics on the balance sheet. Total assets were quite constant recently, but once 5G becomes popular in Singapore, I believe there will be a major capital expenditure which will drive asset and liability increase together. Dividend yield is 6.48%. However, by looking at the significant downturn in a stock price over past 5 years, investor must be very careful on investment. Number 3 is Dell Group Corporation. A lot of people who don't know about this company in detail might misunderstand that they are only doing taxi business. Maybe their taxi business is impacted by Grab and Gojek, which are common car sharing services popularly available in Singapore. Maybe market share of taxi service is taken by Grab and Gojek. However, they have bus services, various transportation infrastructure business, shuttle bus business, chartered vehicle business, and even MRT business, which is the subway of Singapore. SBS Transit is also a subsidiary of this company. Let's take a look at the stock price chart. Fluctuation is relatively very high compared to average volatility of Singapore stock. Recently, because of coronavirus pandemic, due to drastic demand decrease, stock price decreased a lot accordingly. Revenue decreased slightly for the past 3 years and net profit margin is constant, which is around 9%. It explains that most of the net profit they earn, they pay out as a dividend. By right, their revenue is supposed to be increased at least by national GDP growth. Anyway, the company doesn't show growth recently by looking at this trend. Assets and liability are up and down every year. There must be a huge value of depreciation and also a huge value of new capital expenditure at the same time. I guess this is how they keep a similar level of total assets. Dividend yield is 7.45%. Again, they just pay out most of earning by dividend. In my opinion, dividend yield against their net profit ratio is too high. It will cause the limitation of company growth in the middle and long term. Number 2 is DBS Group Holdings Limited. Along with OCBC and UOB, DBS is one of 3 major national banking companies of Singapore. They also provide typical financial services including banking, insurance, asset management, trust, and so on. Now, let's take a look at their stock price chart over 35 years. I can say that the stock chart has been onwards and upwards the same as UOB. Price has become very attractive recently due to the current pandemic situation. I would buy now if I had money to invest in. Anyway, by valuation, and as per the performance of this company in history, this is really a good company to invest. As expected, the revenue trend shows their constant growth in history and good profitability as well. Balance sheet is the same as the typical standard of the banking sector. There is constant slight growth in total assets as well. Dividend yield is 8.03%. The second top yield of Singapore among blue-chip stocks. Number 1 company is Singapore Press Holdings Limited. It was a surprise that this company ranked as number 1. This company is known as SPH. This is a media company probably everyone stays in Singapore would know. Main brand of this company is the Straits Times and the Business Times, major newspapers of Singapore. They also have several local magazines. I wonder why they mainly focus on analog and hard copies business. Even though they also have YouTube channels and websites, for example, it is not developed well enough, and their main business still reliant on hard copies business, which is newspapers. Stock price explains the business shrink of this company. I don't think this company will close by nature of a business. They are a major media company in Singapore. However, fewer people subscribe to newspapers nowadays and fewer people will go to the bookstore to buy hard copies magazines. In this century, people prefer to watch TV or YouTube to get news. As expected, revenue and profit have been decreasing constantly over years. Net profit margin is 27%, which is still high. I am not sure why assets have increased. Financial statement will explain why, but anyway, not much to comment on the balance sheet. Dividend yield is 8.28%. This is a remarkable yield. However, please take note that stock price has decreased by more than 40% for the past 1 year. You did 8.28% dividend, but you faced capital loss of 40% as well. So you encounter net loss. So we should look at several aspects, not only dividend yield when we invest in something. Then, this is the end of this clip. Thanks for watching the clip and please subscribe if you haven't done yet. Goodbye.